A lot of people right now expecting small caps to be the leaders next year over large caps. Normally that would be the case in an environment where you have very low interest rates that can help boost profit margins for small caps, Fed cutting rates, etc. Normally that's where small caps tend to do a bit better than large cap stocks. However, you've got to be a little bit cautious with this. This is what you need to know before the bell this morning. Let's just take, for example, and let's look at a 10-year chart as an example, the S&P 500, right? So let's just take a real long-term look here. So this is a long-term chart of the S&P 500, and going back to 20 years ago. So we've got the financial crisis, we've got the pandemic, and there's this nice sloping uptrend of the S&P 500. So again, not surprising that we've seen this. And so, this is when we start talking about these, kind of different things and taking a look at, say, for instance, let's look at the growth rate over the last 20 years. So over the last 20-year period, the S&P 500 is up 332%. So big number. Now, what's interesting here is that as we look at this, it's a very nice sloping uptrend here, and we're getting towards the top, setting all-time highs. That's obviously what everybody's kind of focused on right now. But if we take a same look at, say, for instance, the small cap 600, or actually let's do this. Let's look at IWM as a better measure. So this is IWM. So IWM is kind of the Russell 2000. That's kind of a blend of small cap, mid cap, kind of captures that whole basic sector. So the S&P is up 332% over that 20-year period. The small mid cap index is only up 263% and nowhere near an all-time high. There's a very big difference in performance. Yes, small caps can, in the short term, maybe provide some outperformance here or there because of variabilities to the markets, etc. But over the long term, if you're a longer term investor, large cap investing has been the way to go over that time frame because you've vastly outpaced what small caps have generated. But importantly, and again, if we zoom in here a little bit, let's just go in over the last 5 years. And this is really kind of the important note right now. Over the last couple of weeks, right, we've heard a lot of talk about, oh man, small caps are just killing it over large caps. Yeah, that's true, right? But they haven't done anything, really, since May of 2022. We are just basically back to where we were in May of 22. So over the last year, these stocks have done nothing. And again, they're way off their all-time highs. Yes, we've had some really nice outperformance in small caps as of late, but if you are expecting weaker economic growth next year, right, small caps aren't where you want to be because small caps are very economically sensitive. So the bet on small caps, if you want to bet on small cap, I'm not saying don't, right? That's up to you. But if your thesis is small caps are going to outperform next year, that thesis has to be based on stronger economic growth. Because again, small mid-cap stocks are much more economically sensitive than large caps because they're smaller companies. They have less revenues. They have less profit margins. The other thing that has been a big differential in the drivers is small and mid caps don't do buybacks, right? Corporate buybacks, we had a record level of corporate buybacks over the last month, which has been contributing to this big S&P rally. Small and mid caps don't have that tailwind of buybacks like large cap stocks do. Just something to consider as you start thinking about where to allocate money. I'm not saying don't for next year. I'm just saying things to consider as you think about allocations as we go into next year. That's what you need to know before the bell this morning.